Hey guys, how's it going? I hope you're all doing absolutely amazing and are trading safely in the markets. It's your boy VGOK and I'm back with another case study video for you guys today. Now in today's video we're going to be having a quick look at a trade breakdown for GBPUSD and NZDUSD during the FOMC statement released on Wednesday the 2nd of November from last week. So the release of the federal funds rate on Wednesday was essentially the statement that the central bank makes in its monthly interest rate decision. Now on Wednesday what we saw was that the US dollar interest rates increased by 75 basis points from 3.25%, as you guys can see right here. So right here you can see the previous interest rate that was in for the US dollar was 3.25%. They forecasted it to go up to 4%, and the actual result of what they did on the news release was the actual increase by 0.75% to 4%. Now when it actually comes to these sorts of various different news releases, the main two events that I like to actually look at to actually see the most volatility are typically any news releases to do with interest rates or unemployment rates. Now looking back at last week's news, last week was a particularly heavy news week as we saw the US dollar interest rate decision, which is obviously known as the federal funds rate, as you guys can see right there, and the US dollar unemployment rate being released in the same week. As you guys see, the unemployment rate that was released on the Friday. And typically the US dollar unemployment rate, whenever that comes out, is also known as NFP, the non-farm employment change, which is usually released on the first Friday of each month. And as you guys can see, the unemployment rate that was released, the previous percentage of unemployment was 3.5%. They forecasted it to go up to 3.6%, and in actual fact it went up. It went higher than the forecasted figure, so making that a lot worse for the US dollar. Now typically we see these two news events happening on separate weeks, which is exactly the reason why there was so much volatility in last week's price action, which we'll be able to see in the charts a bit later on. But with all that being said, let's delve deeper into the actual trade breakdowns of GBPUSD and NZDUSD on their FOMC moves. So as usual, I'm going to jump straight into the before and after screenshots, and the first trade breakdown we're going to go through is the GBP/USD move. Now as you guys can see from this screenshot on your screen right now, this is the before screenshot, so this was a buy scenario, and as you guys can see we saw price entering this blue demand zone, which we're going to go into more detail in a bit later on TradingView itself. And as you can see, price was downtrending quite nicely into this blue demand zone, and I was waiting for a break of structure to the upside to show a change in momentum, to then look to potentially trade this higher to get a bullish move. So as soon as we saw this movement in here, we saw the previous significant structure point around here, and we saw the movement over here moving higher and breaking structure above, having entry in this imbalance area over here, and having stop loss at the low. And then if we move on to the after screenshot, we can see how that eventually played out, and this is on the 5-minute time frame. The before screenshot was on the 1-minute time frame, so we could actually see the entry criteria a bit clearer. But then moving to the 5-minute, just so we can get the whole move in one screenshot, we can see right here that price moved into the entry. It did go slightly into the stop loss region, but by having stops at the low, they were in a safe spot and they wouldn't have got triggered. So after seeing it go into a slight bit of stop loss, we saw the main movement upwards over here, and then at 6 p.m. UK time, which is the time of that FOMC federal funds statement, the federal funds rate being released was at 6 p.m. UK time, as you can see right there. We saw at 6 p.m. the main move that the FOMC statement had on GBPUSD. And we can see at 6 p.m. we saw a big drop down into this other imbalance region here. So potential opportunity for re-entries, as you guys can see from these further demand zones that I drew up afterwards, and then seeing that further movement to the upside. And there is a reason why we looked to take profit on our trade at this region here, which is around a 1:11 risk to reward ratio. So there are the before and after screenshots, and now what we're going to do is have a deeper look into this, have a look into why I chose those zones of interest, why I took profit at that region as well on the actual TradingView breakdown. So over on TradingView right now, we're going to have a deeper look into this GBPUSD buy scenario, and as we can see from here, this is the trade that we actually look to take, and I'm just going to jump it into replay mode so we can sort of track the movement a lot more easier. So as you guys can see from this region here, you can see the reason why I picked this area as my demand zone. So looking at the structural points beforehand, we can see that there was a nice supply zone sort of created over here. We can see this general buy to sell area over here, and as we can see, that's the supply zone I've drawn up, and that eventually turns out to be our take profit region around about 1.154 region. Looking back at the market structure leading into this demand zone, we can see we've got the highs, lows, lower highs, lower lows, lower high, lower low, lower high, and then the lower low. And then we see within this movement over here, within this movement from here to here, we see a break of market structure above this previous point over here. So we know that there's a break of structure up here creating this 5-minute demand zone. So on the 5-minute time frame, we can see this last sell before buy point of interest being created, and as we zoom in, we can see that there's an unfilled imbalance in that region. So we can see there's an imbalanced region over here that's not been filled in, and we can see the general sell before buy region within there as well. So using that as our 5-minute demand zone and then scrolling across and sort of jumping into replay mode, we're going to just track this as it enters the zone, and jumping into this lower time frames, the 1-minute time frame. Now what we want to see is a bullish break of structure after it's entered the zone, after it's tapped the zone, giving us proof that this demand zone is actually valid. So as we click forwards and see how price enters the zone, so now we can see we've got price entering the zone quite nicely in there, and we're going to keep pressing forwards until we see a successful break of structure. Now in this region here, we're starting to break minor pieces of structure already, which is always a good sign. And as we start to see how price develops, do we get any more lower lows forming? And as we can see, it's battling. Price at the moment is battling within this base drop area over here. So you can see price is giving positive rejection away from that zone, rejection away from that zone, struggling to really break above this region over here. And as we sort of keep going forwards with the price, we can see that a lower low is then created. So now this is that structural area to be broken. And as we keep having a look and keeping an eye on the time of all this happening, there we go, that's going to be our main market break of market structure right there. As we can see, this structural point in here, this lower high went on to create a lower low, so this is that significant structural point to be broken. And as you can see in this move here, we saw the break of market structure to the upside, breaking above the significant point right there. And then we also see a nice imbalance being formed over here, and it was at this moment here that the structure was really broken. So this is why I went for my entry within this region here. Now on further inspection, there is a slight imbalance in here, so we maybe could have had a lower entry down in here, liquidity capturing below this wick and getting some sort of imbalance fill in this region. But I did go for my entry in this region here to secure my actual entry and not miss out, and then having stop loss just below this wick down in here. So having about a 7.4 pip stop loss, which isn't too bad for GBPUSD. Now as we click forwards and see how price develops, and we know that the FOMC news release is going to be happening at 6 PM. So I'm just going to put a vertical line at 6 PM right here, so we can know exactly when we're going to be expecting volatility. And notice that we're getting in, a decent, hour-ish before FOMC, before the FOMC federal funds rate decision. So giving us plenty of time to at least be in profit, hopefully before the news comes out. So at least we can reduce risk on our trades, which is the ideal sort of thing that we want to be looking to do. So seeing how price enters our zone now, as we click forwards and see how it gets in. So there we go, we've been entered within the trade, and now we're going to see how price looks to develop. And I'm going to click play, and as we can see, it does delve deeper into the stop loss right there, so it does go slightly deeper in. We do start to go higher up now, so we're in profit, and then I'm going to pause it just before the news release there. So we are actually in a decent amount of profit at this region right here before the news actually hits. So we're in a decent about 1 to 3 risk to reward ratio at that point there. But yeah, keeping the main TP at that 1.154 region roughly, and having that 1 to 11 as our main TP. And then as we see what happens, and at this stage I was tempted to move the stop loss up, but knowing that FOMC is coming, you know, I didn't really want to be moving the stop loss too much, just in case we get tapped out for break even and then it goes in our main direction. So slightly risky, but you know, keeping faith within our analysis, you know, believing in the analysis that we've created at the moment. And then if we play, let's see how price develops. So now we're at the FOMC Federal Funds Statement news release, and in the next minute candle is going to show us exactly what happens on the news release. So if we click forward once, so there's the volatility, big spike down at that exact time at 6 p.m. and then we see exactly what's happened following that immediate rejection to the upside right there. And as we click next, in the next candle we've definitely hit our main TP. So it only took 2 candles after the news for us to hit our main TP of 1:11 risk to reward ratio. Now looking back at why I look to take profit at that region, as we can see, and I think I mentioned it earlier before, as we look at the 15-minute time frame, we can start to see why I'm looking at this region for a supply zone, for a potential TP zone for our buy scenarios. And in this region here you can see this drop, these 2 doji candles acting as the base, and then the drop, you know, that takes out this previous area of demand, these previous demand areas over here. You can see these are previous significant demand was in power here, because it goes on to create a further higher high created. And you can see that a base drop supply zone has taken that out. So it was wise to sort of, you know, take profits in this region, and I took about 90% of the position off and then left the rest to run just in case it did continue to go higher. So at this region we secured 1:11 profits, and as we sort of see what happens afterwards, as the next sort of candles start to go in, it does go a bit higher up into here, so it goes to a max of about a 1:15 risk to reward for GBPUSD right in there. But then as you can see, the movement back down is quite drastic, it's quite aggressive in its move. So it's showing us that this supply zone may actually be valid, you know, if it's causing that big of a drop down. And as we see in that next candlestick there, it does take us out for break even. Obviously at that 1:11 risk to reward, we were looking to move our stop loss up at that break even point, and sort of not worry too much about the trade, having it risk free at that stage. And then we do see it does continue to drop down lower, so it was a wise decision. It was in the end looking like a counter trend trade, very quick TP in that sense as well, but yeah, we look to take profit in the right region at that moment right in there. So now that we've just gone through the GBPUSD full trade breakdown, and now I'm going to go over the similar, is pretty much exactly the same trade. It looked very similar indeed, but on a different pair, on New Zealand dollar against the US dollar. And again, it was around the same time, so I was executing this trade and the one before that we've just gone through for that FOMC statement. And as you guys can see from the screen in front of you now, this is the before screenshot. And again, as you can see, similarly to this, we saw price entering the demand zone earlier on, actually during New York session. Around New York, just after New York Open, around sort of 3 p.m. UK time, we saw a first touch of the demand zone here moving upwards, and then it eventually does go into it again. And then upon further inspection, we see the main break of market structure in this movement up here, breaking above this significant region, which is what gave me confidence to go for my entry in this region here. So having entry in this sell to buy region, stop loss at the bottom over here. And then as we see the after screenshot for NZDUSD, we can see it does travel deeper into the SL, almost taking us at full stop loss, but then upon touching the original demand zone, we can see it gives more price action gives more movement to the upside. And as you can see, we saw more movement to the upside, and then at 6 p.m. at the time of the federal funds rate decision, we see the same sort of move that we saw in GU, a big drop down into this imbalance fill here, and then a main movement up to the upside to our main TP point at up here for that 1:15 risk to reward ratio. So now moving over to the full trade breakdown on TradingView for that NZDUSD buy scenario, which we've just had a look at the before and after screenshots of. So as we can see, we're on the 4-hour time frame right now, and we're just going to start off on the 4-hour right here. We are currently in replay mode, just so we can sort of track the movement a lot easier, so we can get a full understanding of why this move happened. But yeah, look, going back to this on the 4-hour time frame, I've just identified this supply zone right here, and we can see there's a build-up of equal highs. There's a build-up of liquidity at this region just below the supply zone, and this is going to become quite important to us in a bit, slightly later on. But yeah, basically this supply zone here was basically where we look to take our main TP at. Before seeing price drop down. As we can see, we've got in this region this drop, a couple candles over here making up the base, or it could be a drop, redistribution, and then a further drop off in price with a buildup of liquidity just below. And you can see there's a clean imbalance that's not been filled in as well in that region. But looking over to the more current price action at the time of entry, at the time of the actual trade execution, so just jumping it down into the 5-minute time frame, we can see this demand zone right here was the one that I picked. We can see a clean sell to buy sort of candle within there, which is what I based the point of interest off of. And as we zoom in a bit further on the 5-minute, we can see it's built up of a rally, these two doji candles acting as the base, and then a further rally up, which takes out previous supply in here, which caused this big drop down over here. And also it's the main move that takes out that breaks the market structure above this point in here. So we can definitely see in here what the 5-minute demand zone was pretty much made up of. And as we sort of scroll deeper into the analysis, deeper into the actual breakdown, and go into the 1-minute time frame, we can see the first touch of the 5-minute zone gave a really good rejection to the upside, a wick rejection, showing us that this demand zone is quite strong. Now obviously on the first touch of a zone is sometimes I'd like to get in, but on this instance, because price didn't close within the actual demand zone, ideally I'd like to see price close in the demand zone and then give a rejection up. And also in here, the main market structure, if you're looking at the major pieces of market structure in this region here, if price could break above this point, then I'd be happy to take buys slightly earlier on. Instead, we get price coming up to this order block in here, this sort of buy to sell candle over here, giving it nice respect and then dropping back down. So no reason to go for the trade anywhere in this region right here. And again, I'm going to put a vertical line on the news release so we know exactly when that is coming. But then just sort of forwarding price to see how it approaches this zone for the second time, and hopefully closing within the zone and then going higher. So then just clicking forwards until we get into the zone. So there we can see price getting into the zone. The way that this candle closes, we've still not quite closed in the zone yet, but again it's a second mitigation of that zone, and as we see it right there, we can see that it's kind of created equal lows in that region right there as well. So we've got that degree of liquidity right in there, and we're going to see the next candle to see if it can liquidate those lows, take out the liquidity below those equal lows, and then see a big move in the opposite direction. That's what we're looking for in this region right here, to see if this demand zone is going to be valid. So as we click forwards, we can see the next candle right in there doesn't quite go below, then the next one does go below, and now we're going to hopefully looking to see a big movement upwards to confirm this demand zone. So a nice engulfing candle to start with, and then we start to get that bullish price action that we like to see. Now at this stage right here, we want to be seeing a break of market structure above this region here. That would prove to us a nice break of structure above this significant structure point. As we can see, we've got many lower highs and lower lows, so we've got lower high, lower low, and then all of this consolidation, but it's this lower high here which creates this lower low. This one here doesn't create a lower low, so we're not looking for above here, we're looking for a break of structure above this point right in here. So as we click continue and wait for the break of market structure, when we eventually get it, so still it's at this point here, it's obeying this imbalance fill right in here, giving rejection down, so still not broken market structure just yet. But in that move there, that is the break of market structure. We've broken above, we closed above as well, quite nicely. And again, with that candle, we've particularly confirmed that break of market structure to the upside right in there. And in doing so, we've actually created a nice sell to buy candle to base my entries upon. So base the entry upon there, having the stop loss at the main low down here to account for any volatility that we may sort of experience. And so we've got our entry criteria sorted right there, and it's about a 4.5 pip stop for Nzdusd, which is really amazing. And by having the 4.5 pip stop right in there, and having our main TP at that region of supply over here, obviously taking partials at this supply zone over here, which I've identified around 1 to 3, and then taking the rest of the profits at that 1 to 15 risk to reward up in there as well. So as we sort of zoom in and see how price develops around our entry, we're going going to see how price gets into the entry right there. So we've got into entry, and similarly with GBPUSD, it does go a bit deeper into the stop loss. Now upon further analysis of this, and at the time of entry right there, obviously floating in a bit of loss right in there, something that I failed to sort of realize at the time was we have a small imbalance sort of existing within there. This sell to buy candle, this is the last sell to buy candle, you know, that's kind of not really been, you know, mitigated at the moment. You can see that it's taken out very clear equal lows, very clear liquidity, and it's this candle that does it. So potentially coming back into this candle was obviously the optimum, you know, trade entry right in there. But nevertheless, I did enter slightly higher up just to ensure that I did get in. And as we sort of see how price develops and gets, you know, deeper down, it does get to that optimum trade entry right in here, and then we can see exactly what happens afterwards. So it does go a bit deeper, and then we start to see that bullish movement come in. And because we've broken above this point in here now, that's a good sign that, you know, from here we've had a break of minor market structure in there, so lower time frame structure. So we do have, you know, slightly bit more confidence even at this stage, still in loss of the original sort of entry, that we can still continue higher. So seeing how price does develop, it does come down, it does challenge us, just wait for us a bit, and then you do see the bullishness start to kick in over here. Now as we click forwards and take price closer towards that news release, so whilst we're waiting for all of this to happen, we can see, you know, in this stage here we did actually go quite a nice distance into profit, you know, around a 1 to 2.5 risk to reward ratio, which is decent. You know, looking to come into that amount of profit just before the news, you know, is a decent thing to see. So as we sort of see how price develops, you know, around the news entry, and we can see exactly what's happening here. This is that first break of structure which gave us validity from the zone, so it gave us, you know, confidence for the entry. And then upon that, you know, meeting all those sort of POIs and entry criteria, we do see a further push upwards, breaking above all the previous structure points as well, which is always a good sign. And I think as we go into the 5-minute time frame, there is clean imbalances in here that have not been fulfilled. So as we sort of forward the price and see what happens in the next couple candles right in there, and then as I go into the 1-minute time frame, so we can see a lot better on what happens on the actual candle, on the candlestick on the news event. And as we click the next candle, we'll see what happens. So at the moment, literally 1 minute before the news, we've actually filled in most of the imbalance right in there. So entry opportunity again for re-entries over here. And as we see how price develops on that candle there, as you can see that there, price dipped down further, pretty much into the last imbalance fill in here. So the re-entry would have been nicer than the first entry. But you know, depending on spreads, depending on, you know, market slippage of whether you would actually get in there, you know, is another story. But as you can see, the reaction that we got was fantastic. You know, as soon as it comes back into this imbalance fill, we get that bullish movement to the upside. And in one candle right there, we've taken out all of this range over here, which is amazing to see. And then it's just a matter of waiting until it hits that next TP point, which eventually is in the next couple candles right in there. So 3 minutes after the news, that next TP point is hit at 1 to 15 risk to reward ratio. And again, similarly to GBPUSD, it was a very similar move in the sense that they're obviously correlated together, with the dollar being the second pair in the currency pair. So you know, it was a nice sort of thing to see, you know, the correlation matching up like that. And as we sort of see why we took profit in that region, it was a good decision, because in the end, price does eventually go higher, you know, than when it hit the first TP. So as it did this, it did decide to reaccumulate in this region here to go higher, and it was around this region later on in the day where I looked to close off at that 1 to 15 risk to reward. And for good reason, we can see a buy to sell candle was created as it entered that supply zone, and eventually hitting the break-even point, you know, as the stop loss was moved to this region right here. And that was pretty much how we looked to profit from that 1 to 15 risk to reward ratio on NZD/USD. So there we have the full trade breakdowns of that GBPUSD buy scenario, which in the end achieved a maximum of 1 to 11 risk to reward for me, and the NZD/USD buy scenario, which gave me a 1 to 15 risk to reward. Now I'm going to remind you guys again that both of these trades were actually given out in my live trading call, which is open to my VIP mentorship members only. So if you really feel like that those sorts of live calls will be beneficial to you and help you in your trading, then please do drop me a message on my Instagram with the word mentorship, and we can discuss things further on how to help you. But with all that being said, I hope you guys have found this video useful and have been able to gain value from it. If you have gained value, then please do give it a like and don't forget to subscribe if you're new around here. Thanks guys so much for watching, and I'll catch you guys in the next video for more of that trading sauce.